We will start today's session with Raoul Maier, founder and managing partner of Eudemian Ventures. Raoul, welcome to the show.
Thanks for having me, and congratulations on the great success and mission with 1Mby1M.
Thank you. So Raoul, let's get acquainted. Let's get you introduced to our audience. Tell us a bit about your background as well as about the fund.
So on my background, 3 prior lives before venture capital. I started very early in venture capital during the crazy .com boom there in the late 90s. I was quite young at that time, and was able to raise a small fund in Europe at that time. And we thought we were smart, and invested in some European and US startups at that time. But then obviously ran into the .com crash, which was a quite formative experience for me. Had to rebuild, and was impossible to raise a larger fund at that time, so became an entrepreneur. Built a real estate business back here in Europe, which we were able to exit on 5 years ago. And parallel was with one of the large management consulting firms before founding Eudemian Ventures in 2018. So we're a Silicon Valley-based seed fund, and we invest in North American software startups. So we are really software generalists, could say bits of atoms, basically. And there are a few things we would not do within digital. So we'd not do blockchain, would not do crypto, not do gaming. But other than that, really both consumer and enterprise is in scope for us. And we're very specific with the stage focus because we focus on the post-seed stage. So really anything between the seed round and the Series A round is where we focus on.
Okay. Now, how do you define post-seed and what I'm specifically looking for is what kind of validation are you looking for? Are you looking for a particular revenue level? If you're investing in SaaS, are you looking for a particular MRR threshold? Are you looking, if it's B2C, are you looking for a certain, number of users? How do you define post-seed?
Yeah, so I'll come to the metrics in a moment. So the very easy explanation for us is really if somebody has already raised the seed round from reputable investors but hasn't raised an A round yet, that would be the simple definition of what we define as post-seed. Also from a higher level, you could say anything that has achieved product market fit to a large degree, we qualify as post-seed. And coming back to your specific question on metrics, it really depends on the type of business. So if it's a SaaS business, typically look for $1 million ARR. If it's a consumer business, usually 20,000 daily active users is a threshold that we like to see. And if it's more like e-commerce or marketplaces, usually 5 million GMV is a good threshold for us.
Okay, got it. All right. So, and you're looking for North America companies, or are you looking for? Yeah.
Yes.
So talk about geography a bit.
Yeah, we are a bit special, I would say, among, I would say almost, you could say, in the universe of US seed funds in general, but specifically in Silicon Valley, because we are building a transatlantic firm, and we have been doing so from day one, but not in the sense that we would invest on both sides of the Atlantic, but more having a clear investment focus in North America, and later helping these startups scale into Europe, which we think is a must-have market as soon as you typically reach Series B level. And we like to, be as helpful as possible in preparing the US startups for that step.
Very good. All right. And what about fund size and check sizes? What's the fund size? What kind of check sizes are you writing?
Yeah. I can't talk about the specific fund size because our fund is still not closed, so it's basically changing all the time. But in terms of check size, we are writing checks of up to $250K as an initial check and up to $1 million total, including follow-on. So typical seed fund size, not very typical for post-seed thesis, because we usually are a follow-up fund to larger early stage funds that we partner with that bring us in as a value add partner, or we bring them in if a lead is not yet in place. So that's our strategy.
Okay. And just to be clear, your post-seed strategy is on a new term sheet, on a new valuation, right? You're not putting 250K on the same terms as the seed.
No, exactly, the former.
Right. Okay. All right. Let's do some examples of what you have invested in, and as you were talking about some of your investments, talk about when you encountered them. What was the situation in the company? What drew you to this company? How did you find them? And what is it about them that made you write the check?
So, well, let me just maybe start with an overview of our portfolio right now. I mean, we started investing about a year ago. I mean, we are a fairly new fund, and we have done 6 investments so far. And there's a pretty common thread across those on how we, came across them and what we liked about them. So let me first introduce you to our portfolio and tell a little bit more about what those companies are. So one company we invested in is called Grin, and they're building they're actually the leading influencer marketing tool in the market today. And they are solving a very, very complex problem of basically having millions of SMB type businesses trying to reach hundreds of millions, if not billions of consumers using between 10 and 20 million influencers and micro-influencers. And it's a very, very complex, ecosystem, and they're, basically solving that both from a sourcing, but also from an operations point of view. And we really love that business because we really believe in that market, and there are some other reasons related to management why we really love that one. Another one we invested in is called Underground Cellar.
Before we move on to the next one, what stage, what did they have when they come to you, and why did they come to you? What was the situation?
So usually the way we source, maybe let me start with that, is really, because we're a new fund and we need to, we first need to establish a type of top tier brand that those types of what we consider future unicorn founders reach out to us first. So the way we source at this stage is really via our trusted networks of other VC funds. And also, via introductions of some, strong angels in the ecosystem who really introduce us to those deals. So that's how we source at this point. And so in this case, Grin, there was already a term sheet in place by a large fund called Bullpen Capital. They are the leader, in the post-seed stage today. And so we have a pretty similar thesis, except for the fund size differences. And so that's how we got introduced there.
Okay. All right. So please go ahead to the next one.
The next one is called Underground Cellar, and they are revolutionizing the way brands sell online, which is a fascinating concept because they really think that discounting should be a thing of the past, and instead they are switching to upgrades. So they think that there are so many items discounted these days with full price transparency on the internet that's really a race to the bottom that can't be, sustained for many businesses. And so what they introduced is really a gamified solution for never providing a discount, but instead giving random upgrades. And they started in the wine business. And so you imagine that, usually you would shop for a great price, but instead in this case, you say, hey, I would like these 2 or 3 bottles. You get them at list price. But then you get one random upgrade, and it might be a $5,000 bottle, Chateau Lafite or something like that, which is really exciting to many people. And they think they can transfer that to many different markets, like ticketing, once we are post-pandemic again, and other areas, which we think is an exciting new concept. Another company we invested into is called Resolve. They are a spin out of Affirm, the B2C payment transactions company. And they are basically providing instant credit between 30 and 90 days to SMB buyers. And we really think that they can revolutionize the way, instant credit is provided, because today it's a very laborious, difficult process where you have to involve banks and It's just not a very smooth process today, and they're solving that. Serial Box is another investment we did, and they are basically building the Netflix for reading and listening. So they are really transforming award-winning content and bringing it to you in a format where you can really read it and listen to it in a seamless way and switch between the two modes. It's basically, what you're used to in visual with Netflix, they bring that to the other senses, which we think is a very exciting concept. Fifth company we invested into is called AdQuick, and they are revolutionizing the outdoor advertising space. So basically, they're building the leading marketplace for anyone who wants to buy advertising outdoors to make it as easy a process as you buy ads today online with Facebook or with Google. So when you imagine you have millions of advertising site owners today, billboards and other outdoor advertising opportunities, these are very, very hard to access. And they are basically building the leading marketplace for that, which we think is an extremely exciting business. Certainly post-pandemic, but even within the pandemic, it's going well. And the last company we invested into recently is called TinyCare, and they are building the 21st century brand for childcare. And we love that business particularly. I mean, I'm a father of two little kids, and we really think that the childcare experience, particularly in the US, is pretty broken, both from a demand and a supply perspective. So the demand side, obviously, you can't get enough childcare capacity, you don't get the quality you like. And from the supply perspective, it's also hard because many of these childcare providers have a hard time really finding affordable rent, particularly in downtown locations. And TinyCare is really solving both problems, and we really love that business as well. So that's kind of the businesses we invested into. Pretty exciting businesses, and the common thread across all of them is that they were what we consider either full product market fit or very close to product market fit, typically in a valuation range between 15 and 25 million pre-valuations, with a really, you could say, a breakout growth pattern. And that's always what you would like to, catch, and we really focus on those types of businesses.
Interesting. The valuation numbers you're quoting are Series A, Series B numbers, right? And it's interesting that you're not now experiencing these valuations in post-seed.
Are you referring to like 5 or 10 years ago when you say Series A or Series B numbers?
Well, that's what I'm saying, that traditionally those are numbers that we have seen. Yes, recently we've been seeing these numbers in earlier stages, but that's the trend that we are seeing everywhere. The ecosystem is fragmented tremendously, and the series sizes have gone up tremendously, exactly, even in the early stages. So, yeah.
And I think you're touching upon a very interesting point, Ramana, there, because one of the main reasons why we chose the post-seed stage as core to our thesis is really a few big trends that have happened in the venture industry over the past 5 to 10 years. And one is certainly that the A round has kept creeping up and up, further and further. And you have seen a massive fragmentation of the seed stage funding market, right? Starting with seed 10 years ago, and then it broke into pre-seed and now into post-seed. And so you suddenly have a totally different funding environment. But we believe that the post-seed stage is a very attractive one. Even if the valuations seem high compared to 5 to 10 years ago, you get very mature businesses at that stage with a much, with a very different risk pattern from pre-seed or seed investments, obviously, and we think that's a very attractive space to play in.
Yeah. Now, what have you seen in the last 3 months? What are the changes? What are the dynamics? What are the trends? What are you seeing in the deal flow? What's happening in your portfolio? Can you summarize a bit of the disruption era situation?
So I would say from a founder perspective, from a founder perspective who is currently out raising, I really see 3 types of founders being in the market today. One is a founder who is either COVID neutral, I would call it, or COVID benefiting, right? So those are founders that raise right now. The other ones would be what I call like, super founders or stellar founders who can raise at any time. And the third one are really the ones who are desperate to raise right now because of the, tough pandemic situation. I think that's the type of founders that I see raise right now. And obviously you want to identify who falls into which bucket, because the classic, let's say, typical types of, businesses, I think have avoided to raise over the past 3 months until we get more stability and more clarity on the situation. I think that has been a big shift I've seen over recent weeks, and I would say 2 to 3 months.
And have you seen deal flow that's of the other two kinds, where people have COVID neutral businesses or COVID benefited businesses that are coming through?
Yeah, so I think when I look at our most recent deal, for example, right? So for example, TinyCare is a really good example for that. I think TinyCare falls into bucket 2 because you could argue that TinyCare or like childcare is impacted by COVID, and it's unclear whether it's actually benefiting from it or neutral. So it's not an easy pitch to make. But in this case, the founder was so strong that even in such an environment, he could very easily find very high quality investors, and we supported that because of the quality of the founder.
And what is the background of the founder that makes him so high quality?
So he was a senior leader at Minerva project before, and he had a very, very strong leadership background and also had a very strong founder product fit. So he has been working also in the childcare space for a long time, and he has been able to also demonstrate that he can very quickly build a very high quality leadership and advisory team, which are really great indications of somebody who can build a sizable business, and we were very impressed by that.
Okay. And where are you based normally? You're currently in Austria, but are you normally
right now. Right now I'm in Austria, where I'm originally from, but usually we live in the Bay Area, in Belmont, which is really between San Mateo and Rivers. Yeah.
And what is it seems like there is something intriguing about the name of your venture capital fund. What is the story?
So Eudemian Ventures, it really goes back to an ancient Greek concept that was originally developed by Plato and Aristotle, and it's called eudaimonia. I don't know if you're familiar with that.
I'm not.
And the concept of eudaimonia we found is really fascinating because about 2,500 years ago, these two great philosophers really asked a pretty fundamental question of what makes for a meaningful and impactful life. And their answer was remarkably simple. They thought that it's really about making your potential actual. So it's about realization of potential, and that's the concept behind eudaimonia. Actualizing potential. And we love that concept because obviously it goes for humans. It also goes for technology, right? Because a technology that has potential that's not actualized is really worthless. And when you think about the combination of the two, the human and technology coming together in a startup trying to make a large and meaningful impact in the world, then it goes for that, very much as well, because of, startup ideas or startup potential are totally worthless, as we know. It's all about the execution. And so the combination of those we felt is a really good philosophy to have, the firm revolve around. And it's really our mission to make potential actual, and you will actually find it as our slogan on the first page of our website as well for that reason.
Very nice. Raoul, it's a pleasure. Very nice to meet you. And one of these days we'll meet in person after all this craziness is over.
I very much hope so.
Thank you for coming.
Absolutely. It was a huge pleasure. All the best. Stay safe.